Meanwhile, my guest joins the show this evening, Mr. Abel Udi. Mr. Abel Udi is a chartered accountant and a banker. Mr. Abel, good evening. So good to have you on the show today.
Good evening. Thanks for having me.
All right. Let's begin a conversation quickly from the very fact that the capitalization or recapitalization from the CBN started last year. We had the conversation, and for international banks in the country, about 500 billion naira, and the states, the banks that are national banks at 200 billion naira, and on and on and on. We've seen multiple banks battling to upgrade one way or the other, and recent reports show that Nigerian banks have successfully raised 1.7 trillion naira in the first phase of the Central Bank of Nigeria's recapitalization drive. Some certain banks, I wouldn't want to mention the names and the breakdown, but there have been an impact because of these, especially on the Nigerian banking index and the popularity that comes with it. So I've been in a conversation so far. You are in the banking sector, you've seen how the growth has been. Virtually every bank are selling shares, ordinary shares, one way or the other. What the impact has been and what the growth has been towards the 2026 target by the CBN. What has been like for the banks?
Well, for the banks, apart from raising funds to do their business and achieving federal government's policy of having banks that are bigger, that can take on bigger risks and stay afloat in times of trouble, one of the significant impact of recapitalization is that it means banks can do more business, and grow the economy by targeted borrowing to critical economy, critical sectors of the economy. And well, it's a good one that the banks have been able to raise about 1.7 trillion. Well, if you look at the figures, it shows that's about recapitalization requirements for 3 international banks and 1 national bank, which is about 200 billion for 1 national bank. So what we're looking at some major mergers and acquisitions later on in the year, because the CBN, as part of the drive as part of the recapitalization circular, also gave banks the submission of an implementation plan if the recapitalization, they are raising shares, do not actually bring them in close proximity of the desired minimum capital requirement. We've seen a few. I think I wouldn't want to mention names. At least we've seen one, a proposed merger, and before the year we've seen major shift in the industry. I think Nigeria will be better for it come second quarter 2026 when we have a fewer bank but bigger and stronger bank.
Okay, a fewer bank and bigger and stronger bank is a conversation from Abel Udi. One good question to ask, you've mentioned, because we look at the statistics now, 500 billion naira in capital for international licenses for commercial banks, and 200 billion naira for national commercial banks, similar regional commercials and merchant banks to meet 50 billion naira. What other possibilities by 2026 we could have these banks meet these targets collectively? I don't know how many banks are available in the country so far, but large numbers in that regard. When you look at the growth processes and how these involve, because some of them, the banks, the ways are recapitalizing is basically going to the market and people investing in the banks and buying shares. You think these banks can meet these targets by CBN?
The truth is, not all banks will meet this recapitalization requirement through selling of ordinary shares, through dilution of ownership, as we call it. Not all banks will meet it. And not all banks actually going into the stock exchange to raise capital to stand alone. A few banks are going to the stock exchange to raise capital, leverage on their popularity and their strength to raise more money, which will put them in a better position at doing a proposed merger talks. So whichever way, if a few banks, maybe the top banks would remain as they are with improved capital basis, while a few banks who desire to play at the regional and national level, you understand, will retain their identity, while some other national banks who may feel they want to play on the international stage will broker a merger with another national bank who have successfully raised some more capital from the stock exchange and emerge on international bank licenses. While some other banks are regional banks currently will merge to maintain their original status or go to the market to maintain their original status. But whatever it is, we are going to have fewer banks, but banks with more capitalization, to withstand any shocks or triggers that may affect the economy, and also they have more funds, as a fallback to do more banking businesses, which is good for the economy.
All right.
By and large, we'll have smaller banks and smaller number of banks, but bigger banks.
Okay. In other words, we might end up having fewer number of banks and but bigger banks, which in turn many could acquire think that to be about stability in the financial sector. Well, the financial sector has been doing well in Nigeria, but quickly, let's get to talk about one of CBN's policy that's been out. It's about a circular that's been out for BDCs to source exchange from authorized dealers for a weekly cap of $25,000. And well, sometimes a little bit confusing for many. Initially, this particular circular came out, and the target was initially it was set to expire January 31st, 2025, according to directive, but the CBN has extended the possibilities, a temporary window for Bureau de Change operators, BDCs, to acquire this weekly amount of money. Let me ask you now, being that you are within the sector, you understand all the transactions that's taking place. What does the CBN seek to achieve with all of this?
Well, the CBN is trying to liberalize the FX regime, and also the CBN is looking at accessibility of FX to smaller users. $25,000. For people who need to travel, who need to make little payments. And instead of them trying to queue up at the bank for access through the bank's single window, you and I understand now that there are no multiple windows anymore, like the BTA window, the PTA window, the SMEs window, that's the SME window, and various windows that were available in the time past. Now we now have a single foreign exchange market that the CBN operates. So to make room for the retail end of the business, CBN is giving out FX to borrow the change at a discount, so that they can onward sell to people who need to travel, who need to make smaller payment, and also make a small spread because they are part of the ecosystem. And also, this also helps to reduce the pressure on banks and the need to file this documentation to CBN. So by and large, I think if implemented, this will go a long way, to reduce pressure on the exchange rate, and also to further reduce the gap between the official exchange rate, and the parallel market. Fine, the government has been able to narrow this gap, but there's still a need, to narrow the gap more. And making available $25,000 to BDC, will help banks to narrow the gap, as smaller end users of FX would not need to pass through commercial bank or pass through borrow the change.
Okay. They won't have to pass through commercial bank, but pass through Bureau de Change. One part of that conversation, according to the circular, came out at a time where Nigeria's foreign exchange reserve experienced significant decline in January 2025 and dropping $1.11 billion over the course of the month. Well, we don't know how all of these get to play out in that regard. But quickly, let's talk about the very fact that the Central Bank of Nigeria have approved CFA listing, a CFA franc to be listed on the Nigeria export process. Well, according to multiple reports, we heard that the franc would be part of the currency received by banks looking at exports within Nigeria and outside. So I don't know. But for many people who are following this, they're wondering why the CFA franc is included and how possible this could enhance not just export but Nigeria's income and foreign reserve in that direction. Maybe you throw more light on it and we get to know what happens and why the CFA franc is included in Nigeria's exports.
Now, the bill, I think it's a welcome development in the sense that Nigeria is in West Africa, and we're a giant as far as manufacturing is concerned in West Africa. And I think that the federal government is trying to make West Africa, one of the focal points of its foreign policy. And with foreign policy, you have to look at things. You have to look at avenues to gain. And most of our West African brothers are within the CFA zone. And we also need to understand that we have what we now call the Pan-African Payment System, a PAPI system. And if we do not allow banks to open domiciliary accounts in CFA, PAPIs will be a little bit difficult to implement in Africa because the bulk of Francophone countries are under the CFA regime. So what it means is that for Nigerians now, we can open a CFA account. It will ease doing business with our West African neighbors. We can receive payments, in CFA. CBN can hold CFA on behalf of banks. Banks can have CFA, on their books, which means that Nigerians can actually buy CFA to trade within the West African sub-region. It will also enhance the status of the naira as well in the region, because we would not have to pass a lot of transactions through the black market. Because if you've been to the Seme border, you see a lot of informal informal transfer, exchange of naira and the CFA within those regions for businesses. And the flow of trade within the West African sub-region is in the region of billions of dollars. So it is better. It is good that we have a structured system, to reap the benefit of that wide expanse of trade corridor that is available for Nigeria. So what this implementation will mean is that a lot of banks now, apart from having USD domiciliary account, pounds domiciliary account, and euro domiciliary account, now we can have export proceeds CFA accounts, where if I export my products to Ivory Coast, for instance, the supplier can as well pay me in CFA, and I receive the money in my domiciliary account in Nigeria. So I think it's a good one, and it also helps people, the promoters of Pan-African Payment System, that's the PAPIs, to develop products that makes cross-border transactions easy within West African sub-region.
Okay. Well, good positivity there from there based on the analysis. And the other question, many people are picking everything you said. It has to do with how this helps Nigerians do business on the overall. Well, one of those conversation early part of January, probably last week, was that of the Central Bank of Nigeria, Mr. Cardoso, coming out to say that Nigeria's inflation would have hit 42.81% in December 2024, if not for the monetary policy measures that we've seen. But the inflation is quite high in Nigeria, 34.8% in December. And when you talk about interest rates in Nigeria, which is a monetary policy, part of what Nigeria, the CBN is using to battle inflation, is about 27.5%. Well, Nigerians, and I remember you've been on this show before, and you said, well, the way to go isn't just about increasing interest rates and other monetary policies to fight inflation. But the central bank governor has come out and he said clearly, categorically, if we didn't do this, inflation could have gone up to 42.81% instead of the 34.8% that we are in. You agree with the central bank governor?
Do not agree with the central bank governor, because I anticipate a further surge in inflation. When federal government eventually implements the new minimum wage regime, you would notice that the federal government has not implemented the new minimum wage regime, and implementation of the new minimum wage regime, will actually put more pressure on the demand side of our economy. Um, the inflation Nigeria experienced from the inception of this economy and this administration was actually driven by cost. Was driven by cost, and inflation tried to increase the cost of borrowing for businesses in Nigeria, and these businesses needed had to cope with increased interest rates. They have to cope with increased energy costs. They have to also cope with increased cost of production occasioned by the depreciation in FX. And it is the average Nigerian, that is suffering, the combination of these factors, which pushed up prices of goods and services. And we should not, we should try and figure out the composition of our GDP, because when we explain that our GDP grew in 2024, we should know that our GDP growth was 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 influenced by growth in the finance and insurance sector, which grew by about 31%. And that growth is from revaluation gain, increase in interest income, and increase in digital transaction cost, because a lot of Nigerians move from cash to digital transactions, which means that the effect of the GDP is not actually translates to the entire economy. Because if GDP was actually the growth was from agriculture, for instance, you could say a lot of people have been employed, and the effect of the growth in GDP is actually permeating the economy. But we've seen that it's the financial sector which employs few people that grew, which means majority of Nigerians are actually contributing less to GDP growth, and we are not actually growing if we discount the growth in finance and insurance. So that brings us back to the issue of inflation. You see, if Nigerians can't buy because of increased cost, the moment you increase wages for a few people who can buy, you understand, apart from the cost push, there will still be a demand push. And as Nigeria been able to improve productivity across those sectors? No, because the breakdown of the economy of contributors to our GDP shows that a lot of sectors were stagnant or did not grow at all, or some witnessed some drops. You understand? So I feel that the reduction, the reduction in is not realistic, except the federal government does something serious, because the key drivers of inflation in Nigeria is food inflation, transportation cost, and the price of utilities. And if you look at one of the major issues in Nigeria now is telecom. And telecoms also is increasing prices. Other organizations using telecoms as a means of communication will increase prices in like manner. And we have not really done much in terms of agricultural production to reduce food inflation. We are not actually reducing tariff for food importation. So I think for me, um, the, the projected reduction in inflation is ambitious. You understand? I don't see everything on ground that will reduce that shows that we're actually heading towards reduction of inflation.
Okay. You're not seeing anything on ground. It could bring the next question because the next question would follow through with what the World Bank had said recently. And they told CBN should continue the orthodox method of fighting inflation, which is what you're opposed to. But part of that conversation, according to senior economist of Nigeria and World Bank Group, Dr. Sameh Amata, as well as Nigeria's country representative, International Monetary Fund, Dr. Christian Ebeke, well, they were speaking at an event and they spoke about the area of agriculture, which you mentioned as one that could help in the fight against inflation, more yield on the agricultural side, and then the link between the rural areas as well as the urban areas, where he said, and one would increase production locally, but that would take time, they say, but they're looking at agriculture as a mainstay that could help fight inflation. I mean, increase stem of food inflation in the country. So from your standpoint, because you've seen the indices are up there now, how do you think Nigeria can battle this inflation that we're in with? And because it all started, remember, inflation wasn't this high until the administration of the President Tinubu came on board. And first thing was the exchange rate has been a problem because imported goods quite expensive. The second aspect of it has been fuel. And despite Dangote refinery being available at the price of fuel dropping a bit, but somewhat somehow, it's not been able to cushion the effects on inflation in the country.
I think for me, the best approach to um, solving Nigeria's inflation problem is to look at the fact that a lot of Nigerian households spends majorly on food and transportation. And if we, due to the removal of the subsidy and the fact that Nigerians have to now contend with increased cost of fuel, then I think the federal government should look at ways to reduce the food inflation. And one of the ways to reduce food inflation is to reduce tariff on food products. Nigeria, for now, on the short term, should allow for food importation to reduce our inflation. At the same time, if we look on the longer time, we can see that federal government has increased its funding for the military by 16%. I think that alone, if followed through, if properly implemented, if we can discard with the militancy problem in the north and spend more on agriculture, in the medium to long term, we should be able to achieve a level of food sufficiency if our farmers in the middle belt and the north don't get back into agriculture. But before we get to that level, there must be a trade-off. And the trade-off is, reduce tariffs for food importation. Let Nigerians be able to feed. If they can feed, then they can save more and can have more capital for investment. Because when people can't reinvest more, businesses will not grow, and the economy will fight you. If we don't have the kind of recapitalization, revaluation gains that banks recorded last year, so we'll be talking about a drop in our GDP rate, as I'm putting in line in terms of recession. So we need to be practical. You understand? The issues of last year might not repeat itself this year. We might not have too much of the valuation gains this year of our foreign related assets. We might not have that this year. So we need to look at, on the short term, reduction in tariffs for food importation. We can drive down food inflation.
Okay. If we can drive down food inflation, it would be better for Nigerians and economy, and we might have Nigeria's economy being a bit stable comparatively to last year. It's the last word from Abel Udi. And now we'll go on a quick break, and when we're back, it will be a conversation around brutal change operators. Recent times we've heard the CBN governor speak about FX code compliance. It would be a conversation when we're back from this break. Don't go anywhere. Welcome back. It's Business 101, and my name is Bladunkem. Well, Mr. Abel Udi, a chartered accountant and a banker, has been speaking with me, looking at CBN's policy for 2025 and how far they've gone, and what the postulation are for 2025 and how this can affect the economy. And one of those conversations we've spoken about has been the growth and inflation. The World Bank gave perspective regarding inflation and the orthodox method of solving inflation in the country. He's really spoken about boosting agriculture and importation of food to stem the position of food inflation in the country. And now, Mr. Abel Udi, still with me. Let's continue the conversation and look at the state of the FX code compliance to the broader change operators. Recently, everyone in the news, we've heard about it, and that Mr. Cardoso, Olame Cardoso, the central bank governor, said and stated that Nigerian banks, PDC operators, are to comply with the FX code, putting lots of pressure on the FX code compliance. It's been a conversation. For many Nigerians, they barely understand what the FX code is all about, not to talk about a compliance. What is this FX code all about? Mr. Eba Ludi, are you there?
1 minute, please.
Hello, Mr. Eba Ludi. Well, we're talking about the FX code. Many Nigerians have heard the central bank governor speak about the FX code and the compliance for banks as well as broader change operators. What is the FX code all about, and how will this impact the exchange rate and the use of the naira and the dollar and all of that?
Well, I think the FX code is a set of compliance guidelines. A set of compliance guidelines that must be adhered to by all market participants in the Nigerian FX market. Now, it's like how do I put it? It's a code that allows every participant to signal their intention to adopt and adhere to a strict set of good practices. You understand, which actually hinges on transparency, and it also serves as a resource for participants in the FX market to objectively access operational and compliance with the relevant laws of Nigeria, relevant circulars of. Now, this FX code, I think for now, the implementation has not really happened. You understand, because the FX, the Foreign Exchange Committee, you understand, still going its application and also inviting me to do the change and banks, and also the FX code, because the key participants in the foreign exchange market, are important bankers, not say important bankers and some maybe exporters and Nigerian customs. The FX code allows you, it creates this compliance system such that whenever there's a shift in policy from the customs, from the CBN, from the Nigerian Stock Exchange, there's a convergence of these two in one, and it also ensures for proper transparency in the industry, because before the introduction of this FX, you and I would know, a lot of things are happening, a lot of things were shoot in secrecy in the Nigerian FX market. But with the introduction of the code now, we will have a system where a register is open to all market participants, and they will be able to show their commitment to the laws, and circulars of the CBN.
Okay, a good perspective regarding the FX code and what it would do for the exchange rate and the different parties that are participating in exchanging these money. Similarly, regarding Bureau de Change, the 2025 license renewal fee, the Central Bank of Nigeria gave Bureau de Change operators a waiver regarding the annual fee or licenses fee that they have to pay. And I just want to have your perspective on this. When it has to do with a licensing fee and there's a waiver that they're being given, how does this apply? How is it workable? And how does this entirely affect the setup?
The truth is that for most Bureau de Change in 2 to 3 years, the CBN has not been allocating FX then. And if you don't allocate FX to Bureau de Change operators, there will be a reduction in their income. And these are in the space they will support for like 2-3 fiscal years. And if you now decide that you need to charge them for the license, where would the funding come from? Because without allocation of FX, the change cannot make money. So if there's not made money, yes, how do you license them? I think so. The CBN is looking at it from the fact that we've done these people in about two financial years, them to pay money for the not license overkill. CBN is saying, and we'll start a new regime where you get $25,000. Subsequently, if you manage it well, the effect on the economy is minimal. We are able to converge the exchange rate more. There can be in business, support you, and take the renewal. But for now, the applications to the coming, but there's no basis for renewal of life.
Okay, no basis for most of it, but let's talk about Nigeria's economy now and a CBN. As the CBN governor also came out with a perspective for CBN, said that Nigeria's economy is to expand to 4.17%, and inflation is to ease in 2025. Well, I know we've spoken about inflation already. Let's talk about expansion of the economy. So far, what the indices are for a CBN that would lead to this. Gross domestic product is expected to grow by 4.17% and inflation to ease in 2025. Amid the fact that inflation already standing in at 34.8%, but Mr. Cardoso is optimistic that it is expected to decline amid all the reforms, and the reforms will yield results. So I ask you, as and analysts in this. When you look at Nigeria's economy, 2025 seems to be the year where inflation really eases. And talking about expansion of GDP, that it could expand to as much as 4.17%.
Well, like I said previously, Nigeria's GDP growth in 2024 was driven by the finance and insurance sector, which had a growth of about 31%. And this growth was occasioned by um, revaluation gains, or from banks. And we also had increase in interest rates, by banks, which pushed up bank earnings, and also an increase in the use of channels, which saw that Nigeria do over 1 trillion transactions over multiple channels last year. Now, it remains to be seen how Mr. Cardozo intends to achieve this 4.17% growth this year. And I think it is ambitious for Mr. Cardozo to assure Nigerians of a reduction of 20% in inflation rates, when the same government is promoting, projecting an increase in its operating cost, which is salaries to federal civil servants to 70% minimum wage. And we should know that our budget for last year was actually a deficit budget, where the cost of the current expenditure outweighs revenue by almost 50%, because Nigeria was actually our current expenditure was at the federal level was more than the operating FAC allocation to the federal government. So you see, I am projecting that there will be some improvement in the area of agriculture, maybe increased spending on security. But aside from that, except Nigeria gets some forms of capital importation from increased foreign direct investments, and so we'll be looking at a growth. But 4.17%, is not what I project. I think our growth for this year will be in the range of 3.5 to 4% for the year, and that will be driven by investment into telecommunications, growth in banks, application by increased share capital base of banks, and the need to drive to work those capital. You understand? So those are the areas where I see the growth coming from. For oil and gas, will be restricted by OPEC quota, except maybe within the year, there are some shocks that happen in where oil to go up. Those are the key areas where this growth can come from. But aside that, there's no clear direction at driving the productive sector of the economy, because the federal government will not stimulate growth in that level, because more of federal government revenue is going to recurrent expenditure, and I'm not seeing clear bilateral or multilateral loans going towards maybe infrastructure financing. So infrastructure financing alone on its own, can drive growth, but I'm not seeing the multilateral lending that will towards infrastructure financing.
Okay, just adding the indices from the Central Bank of Nigeria's governor, Mr. Cardoso, a place to take Nigeria's foreign exchange reserves to more than $40 billion after recording $6 billion FX inflow in 2024. And according to the Central Bank's governor, the priority remained to maintain price stability and bolster market confidence, and the bank aims to enhance transparency and efficiency within the foreign exchange market. So one of the conversation from Mr. Cardoso is that our foreign exchange reserve would increase beyond $40 billion after the addition of $6 billion the previous year. What do you make of it?
Well, for me, the foreign reserves, it's not a measure, that I take very, very seriously. When there's a projection by the Food Organization and UN that about 3.1 million Nigerians will become food insecure in 2025. Now, what exactly do we need the foreign reserves to pay debts and to stimulate trade? Now, at this point, is Nigeria actually stimulating trade? The acquisition of $40 billion, would it stimulate trade for Nigeria? would there be targeted FX discount for specific sectors of the economy? If not, then what exactly are we doing? Are we keeping 40 billion for? Except the sector, those who are saying we are going to borrow excessively, you understand, and we are going to keep a reserve of 40 billion to pay this debt on demand. You understand? But if we don't have a $40 billion reserve, and it does not result to targeted FX on specific industry that affect you and I to reduce translation cost and data cost, then we might be on a long journey, and things will not really pan out the way it's planning. Because if you look at the projections, the number of Nigerians exposed to food insecurity, for instance, is growing by the year, and the projection for 2025 is 33.1%. And we've seen that a lot of conditional cash transfer from the government, which are FX loans, you understand, which Nigerians need to pay, is not properly managed, and we're not generating enough revenue to pay this debt. So the $40 billion, the question should be, is it going to be generated from debt, or is it going to be generated from federal government revenues?
Okay, before I let you go, Mr. Abel Udi, because we're getting towards the end of the show, one conversation has been that of FX arbitrage. We've really talked about it, especially when there was a free floating of the naira from the Tinubu government, and the fight was to take away that arbitrage. You've spoken about it on the show before also. And now I want to ask you now, because central bank's governor have said, well, the arbitrage level is really reduced, limited opportunities in that, and that as expectation will be for more appetite for real sector development. When you look at the difference between the international exchange window and the paro market, the black market, there's still that demarcation in it. Can we say that this particular government has really achieved in limiting the opportunities in the FX arbitrage? Would you say that so far?
I think for that, I think I'll give them kudos, because before now we had the exchange rate at below 500 and the parallel market at about 700, 800, which was about 100% arbitrage. Right now we have the official exchange rate at about 1,516 and the parallel market at a little over 1,600, which is a 100 naira difference, which is less than 8%, in terms of arbitrage.
But still much.
And if you Yeah, it's much, but if you for most businesses, it's either they approach the electronic forex market, and bid for their products and bid for their FX and use it. You understand? For those that don't have the time, they just go to the black market and buy. You understand? Because there's still no difference, because between buying in the market, 100 naira difference is negligible. Or like when we had 100% arbitrage, where you could buy from the CBN at 400 and sell at 800, and not offer any service, not produce anything, and make 400 naira.
Could the difference be better?
The difference could be better. However, because we are a little bit dependent on FX, we will always still have that margin. And due to the fact that our financial system also accommodates for the change, that margin will still be there. However, we are hoping, that as with the introduction of the FX code, and if there's a significant compliance with the FX code, and we would see a more contraction, in the gap between the official price and but it will be totally eliminated. It can never be totally eliminated, because it's the parallel market, willing buyer, willing seller market. So if I can sell my FX holding at a little above the official exchange rate, if I see a willing buyer, I will sell. You understand? And it also depends on the desperation of the would-be user of the FX of the FX. So I think we can only reduce it, but we can't totally eliminate the margin. Right. There will always be a margin.
Okay, always going to be that margin, difference between the official market and the parallel market. Mr. Abel Udi, I'm about to let you go, but before then, just one last word, 30 seconds thereabout, because the time is up. When you look at 2025, what do you see for Nigeria economically and financially? 2025 and for the citizens of the country?
I think by 2025, there will be Nigerians will have to contend with a higher inflation trend. And we also will see, I project that there will be more productivity in terms of agriculture. I think the federal government is keen on security, will achieve that. And I think we'll be able to attract capital importation actually into the communication sector. So it's not all bleak for Nigeria. Nigeria is a very resilient economy. Nigerians are resilient. I foresee growth. You understand? But I don't see a 4.17 growth, but I'm seeing a growth between 3 to 4%. And I think it will be largely through information and communication technology and finance. But I don't see at least the projection of a significant reduction in our inflation figures.
All right. Mr. Ebel Udi, thank you very much. Your thoughts are always appreciated. When it has to do Business 101, the intricacies that comes with policymaking from the CBN and the answers you offer in that direction. Thank you for being a part of the show this evening.
Thank you for having me, Leiden.
All right.